bring in Jeffrey Cleveland. Hi, Jeffrey. What's your reaction to what the president's had to say today? I know you've been listening. Go across the board. What's your reaction?
You know my response, Stuart. Ignore the politics, focus on the fundamentals, and the fundamentals have improved. So the global manufacturing data, people aren't paying attention to this, but the last 4 months we've seen improvement. Global manufacturing and PMI is now above 50 for the first time since the spring. The 50 delineates expansion from contraction. So this scare story of the year has been global weakness. That is going away. We're seeing stabilization in the global backdrop. That, I think, Stuart, will also feed through into U.S. manufacturing as we head into 2020. So this is a good story about fundamentals that are actually improving right now.
Jeffrey, I do hear you. But look, the Dow is down 400 points now. It was down 250 yesterday. And the backdrop to all of this is the possibility of more tariffs on China products come December the 15th, taxes on French luxury products, and maybe no USMCA. That's what the market's reacting to. And I put it to you, Jeffrey, if those things happen, more tariffs here and there and no USMCA, our economy could hurt.
You know, what's amazing, Stuart, is actually the resiliency of the U.S. economy. Even with the tariffs that we've seen and talk of more tariffs, Stuart, we're still seeing 2% growth in the second half here of 2019. I think we'll have a 2.3% growth figure for the full year 2019. That is only a little bit slower than what we achieved in 2018, 2.5% growth. Excellent that we're able to withstand that. And what's driving it? The consumer.
Yes.
The U.S. consumer. Don't forget, the labor market is tight. Consumer incomes are still growing at a 4% clip, Stuart, and that'll continue, I think, to support the U.S. economy, even if we do have some trade volatility.
Okay, let me give you some more on this, because we've got new numbers from the National Retail Federation. Shoppers spent an average of $50 more this year than last year. 93.2 million shoppers shopped online. 84 million showed up to bricks and mortar stores. Isn't that exactly what you're saying? The consumer is leading this economy. The consumer is very, very strong.
We've got a tight labor market, one of the tightest labor markets in generations, low unemployment, low layoffs, high job openings. That's pushing up wage growth, and that's generating aggregate income. And when consumers sit down at the computer, Stuart, they're not worried about tariffs. They're worried about the best deal that they can find on Cyber Monday. And I think they're finding that. That will continue to drive growth. That will continue to drive earnings. It's all about fundamentals, Stuart.
Okay, bearing all that in mind, do you therefore think that today's sell-off following yesterday's sell-off is a temporary blip? Is it?
Temporary blip. On a longer time horizon, it's noise. Investors have to stay calm and focus on the fundamental story, which is improving, focus on the consumer, which is the heart of the earnings story. And if that story remains intact, equity markets can continue to make new highs. Earnings drive equities. That's the key.
Got it. Jeffrey, that was pretty good. Thanks very much indeed, sir. Short, sharp, and to the point. We love it. Flat out.